Hello, my friends. This is Doug Fabian. Welcome to my weekly ETF report. The video update today is Thursday, February 12th, 2015. I don't know where the year is going, but it is absolutely flying by. As always, three things to talk to you about today and some real details, so you might want to get something to write with because we got a lot to talk about. You know, I entered this year with the belief that the international markets were going to outperform the domestic market. And so far, that forecast is coming to fruition. International markets up 3 to 4%, US market up less than 1%. So we're getting some good momentum out of the international markets, but I believe this is a longer-term trend. And I want to bring you to my first exhibit of the day. Take a look at this slide. There are 3 exchange-traded funds listed on it, covering a period of approximately 4 years. The black line represents the S&P 500. You can see that it's up about 60% over the past 4 years. The second line is EFA. This is an ETF that represents the international stocks in large countries, in Japan, in Europe, Canada, Australia. The third line, the blue line, is the emerging markets. And you can see that the total return on EFA and emerging markets has significantly lagged the US market over the last 4 years. Now let's talk about historical periods of time. Let's talk about a 30-year period of time. Well, over 30 years, these 3 markets move almost identically. And the best performing market is the emerging markets. Now, I realize that emerging markets are volatile and they've been out of favor. And I prefer more the developed markets this year, and I'm watching the emerging markets quite closely for them to start getting their act together and starting to move more. But the case I'm making here is that international markets have underperformed. But don't make the mistake that most people make, which is to extract and into the future the most recent past. And I believe that now the international markets, EM and DM, emerging markets and developed markets, are going to play catch up. So that's the first idea to share with you. Now let's talk specifics. And here is my second topic of the day. Let's talk specifics about the Inside ETF conference and the great information that I came home with. And I want to talk about innovation because, man, is innovation just in full swing in the world of exchange-traded funds. I want to talk to you about what is going to sound like a complicated subject, but it's really not. The subject is hedged currency equity ETFs. So what does that mean? There are currency ETFs now that take out the risk of currency volatility. Now, you may be aware that the euro, Europe's currency, and the yen, Japanese currency, have both been down significantly versus the US dollar over the last several years. They have both moved more than 20%. So let me give you an example. Let's say that you were in Europe and you were up 20% in European stocks, but the currency's down 20%. Guess what? As a US investor, you made 0. Well, that's no good. So the concept here is the world of exchange-traded funds has adapted, and they've come out with an ETF that enables a US investor to still hold US dollars and invest in these currency markets, or excuse me, in these equity markets without currency risk. Now here is another chart for you to review. And what we're looking at here is the Deutsche Bank EFA index versus the iShares EFA index. And in this example, you can see that clearly the currency hedged ETF over the last 3 years has significantly outperformed the unhedged currency ETF. Now, going back to some of my major themes, investment themes for 2015, I believe we are going to remain in this world of a strong US dollar. So if you're going to invest overseas and the US dollar is going to remain strong, you're going to have currency risk. So therefore you can invest with less risk by investing in a currency hedged equity ETF. And I invite you to look closely at the Deutsche Bank International EFI Indexed Fund as a core holding in your portfolio. The last concept I want to talk about today has nothing to do with exchange-traded funds, has everything to do with you and your personal finances. I believe one of the most powerful investing accounts is the Roth IRA. Now, not everyone can qualify for a Roth IRA. I just checked, and the 2014 income limits on a Roth IRA are pretty high. It's $181,000. So if you make less than $181,000, you qualify for a Roth IRA. Now, what's the big deal about a Roth IRA? The big deal about a Roth IRA is you can contribute to it and your money can grow tax-free, and when you come to withdraw it, it comes out tax-free. There are no taxes that will be due on a Roth IRA if you follow the rules. Another cool thing about the Roth IRA is you can get at your principal. You can get at your contributions before age 59 and a half. So let's just say that you have contributed $5,500 a year, and that's the maximum contribution to a Roth IRA right now, $5,500. If you contributed that amount for 10 years, well, that's going to be, $55,000. And if you wanted to take out $5,000, $10,000, $15,000 and you're under age 59 and a half, you can do so in a Roth IRA without any sort of penalty. It's really cool. So there are some rules you need to follow. There are some details I'm not getting into that I want you to, plenty of information out on the web there. But let me tell you, if you're looking for a place to save money, if you're looking for a place to invest, there is no better tool than the Roth IRA. And one final note, those of you who are retired, those of you who might have built up some nice assets, maybe you want to open up a Roth IRA for your son or your daughter. Maybe you want to open up a Roth IRA, and people have to be working in order to be able to qualify for a Roth IRA, for your grandkids. This is a great gifting tool to give them the money to open up a Roth IRA. And one last thing, if you can convert a portion of your traditional IRA or of your rollover IRA to a Roth IRA, it really makes sense from a tax planning standpoint long term. So I gave you a lot of information today. I always want your feedback. So remember, you can send me an email. It's askdoug@dougfabian.com, askdoug@dougfabian.com, and do not forget to get out to etfu.com and register, become a member, listen to my weekly podcast, tell your friends about what we're doing to get the word out on this wonderful world of exchange-traded funds. This is Doug Fabian. Thanks so much for tuning in this week.